So we'll talk about the dollar yen first because we talked about this last week. We've actually talked about it quite a bit the last couple of weeks. And from a fundamental reason, we know that the yen is just way too strong, and Japan really needs to weaken the yen. And several weeks ago, we started talking about that if Japan was going to intervene, that we needed to start expecting some sort of verbiage that started to guide the market in that direction. And we did start to get that last week, a little bit the week before, more so last week, and we're hearing it more and more come out of Japan that, they're serious this time. The yen has to weaken. And I think a lot of what they're trying to do is just based off of conversation alone. It's always their first step of intervention. They're always trying to just convince the market that that's a wise choice. And so I think we're seeing a lot of that now, and we really are seeing a lot of that in our price action as well. You can see how even though price came down and broke this old support level, now remember we talked about this severe support rejection when this was happening. Price did make a little run here at it. Couldn't hold on. The yen strengthened again, but look, it really didn't keep strength. It didn't hold strength for very long and immediately showed an even deeper price rejection than we saw before. This is all on the daily chart. In fact, if we zoom out even a little bit more, you can see that the market's very uncomfortable playing with these lows. I mean, this is lower than it's been in a very long time. So that's important. What we're reading then out of price action is the market sentiment that says, yeah, we went this low, but we really don't like being here. The other thing we can see in here is off of this price rejection, we really got a lot of enthusiasm for the long side of the trade. On the pull back, even though these are pretty good sized candles, much better than these little undecided ones in here as we were hitting these old lows back here, they're still not as enthusiastic as the bullish candles. So even though we get a pullback, as long as these short side candles don't look as excited for the short side as the long side candles looked for the long side, then I'm going to continue to hold a bias to the long side because that seems to be where the enthusiasm is. What I like to do next then, recognizing that I am now kind of back in this range that formed itself, and I can even stretch it out a little further to grab these wicks and the tops of these bodies, right? And this becomes the range that we're looking at. I'm actually right back inside of that area of indecision, right? I'm right back in that spot where price paused before. That's kind of important because anything outside of this range is going to be pretty definitive by the market. So what I like to do next then is go down to the 4-hour chart. And if you've been trading with me for a while, we talk about, I always say we, like I've got somebody here that talks with me. Me and the mouse in my pocket, I guess. We talk about this triangulation that happens, and this isn't just strictly with the yen. This is what pairs across the board, and it seems to happen much more frequently in the Forex market than it does in the equities market. But generally what happens is we get a really nice wide swing, usually a good area of rejection both on the resistance side and the support side, and then immediately followed by a new lower high, a new higher low, and we start to see things get really tight in here. Now what I did on the yen and what I'm willing to do again on the dollar yen, what I did is I came down to the 1-hour chart and I identified within the context, remember we're putting price into a larger context, within the context of this wrapping up, of this indecision, of the kinetic energy that starts to build up inside the pair before it breaks out, I identified what I like to call a muddy area. And these are areas that, where price kind of showed a certain amount of conviction. Let me see if I can find the exact price. You can see here where, price really kind of used, and if you maybe need to go out to the 4-hour, there we go, that's better. You can see where we've got this, which became resistance here, was at one point pretty strong support, right? And in between this pause and this conviction, we had this muddy area. My signal to go ahead and go long on that was the first candle that showed conviction in the direction of that trade. And then in fact, it was this candle yesterday morning. And then things went sideways on me for a really long time. And then it moved while I was sleeping, so I couldn't capitalize on the trade like I like to do on my money management. And it's actually now hit my profit target at 89.80. The reason why it went for 89.80 is I wanted to come in just below. I was shooting for the secondary high. I wanted to come in just below the even number, right? The double aught and the .50 mark seem pretty significant in the yen pairs, where on regular pairs it's pretty much just the even numbers. So my profit target on this first trade is already over. However, because I have this overall bias to the long side, and because I have significant support rejections on each new high or low, I'm completely willing to take a close back up above this box. In fact, with all the distractions of the last seminar or the last webinar kind of melting into this one, I meant to actually put a position on. My first positions are really, really tiny, and I'm not making a trade recommendation to you. I'm asking you to take the information I give you today, to watch it, see if it's something that you think you might be able to trade, see if it's something that makes sense that you could build on in your trading. I never, ever, ever want anybody to just blindly follow what anyone else is trading. I want you to always make your trading your own, and I think you'll find much more success there.